familia, ¿cómo están ustedes? Hope everyone's all right. I just come back from a nice little break. Was out in Gibraltar for a bit. You know, I had to charge the batteries and all of that. Done some good eating. Oh man, ate so much food. A lot of time by the beach, just relaxing and chilling. And yeah, also had to squeeze in some exercise. You know, a lot of bad food I was eating, so I had to balance it out. Always got to balance things out and that. But anyway, I'm glad you're back here for another one because once again, you could have been watching anything on YouTube, but you're right here with me. And for that, I'm grateful. You could have been watching a cat walking a dog. Or you could have been watching a guy who's about to have a fat bill from Tesla.
Done all right? Oh, sheesh.
Either way, you're right back here with me, so gratitude to my only attitude. This video, I'd like to show you some UK dividend stocks. Most of them are Dividend Aristocrats. The criteria for being a Dividend Aristocrat in the UK and the US is slightly different. In the US, your company has to have raised their dividends for 25 years. In the UK, it's just 10. I believe besides that, the rest of the criteria is the same. There might be something else actually. But yeah, there's a little list that I've got just showing you some good companies to put in your radar. Don't blindly go and buy them. You know, always do your due diligence. This is just some stocks to put on your radar and you can go from there. So let's roll the credits and crack on. First stock on the list is one of my favorites, and that's GlaxoSmithKline. I know not everyone will be into this one. There's quite a few of us that's not really into farmers. I'm not into farmers, to be honest, but Glaxo is just one of those strong dividend payers that if you're getting dividend paying stocks on the UK market, I feel this is one that should be on the list. It has a market cap of 74 plus billion, a PE ratio of just over 17. I've looked to see about their forward PE, but they don't have one. I'm not sure if they're not planning to be in profit next year. I doubt that very much, but I'm going to look further into that. They have a dividend yield of 5.44%, which is very good. And they also pay their dividend quarterly. I don't want to go into too much detail. I don't want this video to drag on. Plus, I've done other videos covering GSK. But as you can see here, they're into pharmaceuticals, vaccines, and consumer healthcare. Yeah, some of their consumer products include, you know, household names like Aquafresh, Voltaren, Sensodyne. But yeah, huge company, big dividend payer, not going nowhere. So yeah, GSK makes my list. Next on the list is water company Pennon Group PLC. Share price currently £12.60. They have a dividend yield of 2.1% and a market cap of 3.51 billion. Pennon create value for shareholders by providing high quality environmental infrastructure and customer services, and by efficient financing and strong management of the group as a whole. Pennon provide water and wastewater services along with water retail services. As climate change is on the tip of everyone's tongue right now, having a company like Pennon in your portfolio could be a really good move. Next on the list, we have Tate Lyle. If you're from the UK, there's no way you've grown up to adult age and you don't know Tate Lyle, very popular. They have a market cap of 3.38 billion. They pay their dividends biannually, so you'll receive payment twice a year, a lower payment and then a bigger one. In the lower one's in the spring sometime, I believe it's actually in January, I think. And then around August time, you'll get the heavier payment. They have a dividend yield of 4.31%, and they have raised their dividends for many years. And as you can see here, Tate and Lyle are into beverages, dairy, soups, sauces and dressings, bakery and snacks, confectionery and animal nutrition. Next, we have Ashmore Group, trading on a day for £3.78. They have a market cap of 2.7 billion. They have a dividend yield of 4.38%, and they pay that out biannually. Ashmore is a specialist emerging markets investment manager with over 25 years experience in these markets. Today, we continue to innovate, offering new strategies that provide an opportunity for investors to participate in emerging markets. Next on the list is United Utilities Group. Today, their shares cost £10.56. They got a dividend yield of 4.8%, which is very good, and a market cap of 7.2 billion. United Utilities' purpose is to provide great water and more for the Northwest. It drives them to deliver services in an environmentally sustainable, economically beneficial, and socially responsible manner. It is the reason they exist, and it challenges them to look after the interests of the stakeholders with whom they interact by continually improving their performance and creating value. I'm not into any water companies myself. I'm not actually involved in this company, but I've been doing a bit of reading and whatnot, and I feel this is one I might get into. Right, next on the list is Rio Tinto. If you're living in the UK and you're a dividend investor and you know about a few stocks, there's no way you don't know about Rio Tinto. It's in a lot of dividend portfolios. They have a dividend yield at the moment of 9.23%, which is absolutely huge. It does fluctuate with the share price, which is to be expected, but that is a huge dividend yield. They have a market cap of 87.5 billion, and they're just an all-round excellent choice if you're building a dividend portfolio of UK stocks. They do pay biannually, and yeah, they're a very strong earner. We produce iron ore for steel, aluminum for cars and smartphones, copper for wind turbines, diamonds that set the standard for responsible, titanium for household products, and borates for crops that feed the world. Next on the list is TPICAP. They have a market cap of 1.56 billion. They have a dividend yield of 3.52%. They do pay their dividends biannually, so you'll receive payment twice a year. But one thing you should know with them, they are on one hell of a downward trend at the minute. When or if it's likely to turn around, I don't know. But they've been in this for a very long time. Me personally, I'm not really going to get into this one until I see a turnaround. But yeah, a very good stock all the same. TPICAP Group acts as an intermediary between sophisticated market participants who are seeking to buy and sell financial products in markets where there are no centralized exchanges or market makers, such as over-the-counter or bond markets. As the world's biggest interdealer broker, they are uniquely placed to add value to the clients by providing access to the largest pools of liquidity and best pricing. Next on the list is Phoenix Group Holdings, currently trading at £6.25. They have a market cap of 6.248 billion, and they have a dividend yield of 7.69%. The Phoenix Group are proud to be the UK's largest long-term savings and retirement business. Our broad range of companies and products mean we can support people across all stages of the life saving cycle and provide our customers with a life of possibilities. We provide the right guidance at the right time to ensure our customers feel safe on their journey and through their retirement. Right, next on the list is a company I've mentioned in other videos, British American Tobacco. Currently £27.11. They've got a big market cap of 62 billion. And they have a dividend yield currently of 7.97%, which is huge. I know a lot of people don't really want to get into tobacconists, got a bad label to it, but they are a very strong dividend payer and one of the few dividend paying companies in the UK that do pay quarterly, which goes down very well with me. We're a leading multi-category consumer goods business. Our purpose is to build a better tomorrow by reducing the health impact of our business through offering a greater choice of enjoyable and less risky products for our consumers. So like I said, they're trying to more get into vaping and that side of things rather than just actual tobacco. So, some people say they're immoral and whatnot, but they are trying. Right, next company is Jupiter Fund Management, currently costing £2.65 a share. They have a market cap of 1.47 billion and a very good dividend yield of 6.36%. They haven't had the best growth. Yeah, I'd like to be pretty clear on that. When they're going to turn things around, who knows? But I don't actually own this share. And the point of this video is just to put these stocks on your radar. Because again, I'm not a financial advisor. More importantly, I'm not your financial advisor. Always do your due diligence. I'm just trying to put some stocks on your radar that you might want to look at. Out of this 10, you might find 2 that you think are really good. And I'm happy with that. So the Jupiter Global Sustainable Equities Fund invests in companies that are leading the transition to a more sustainable world. They focus on the highest quality companies that actively balance the needs of 3 groups: planet, people, and profit. Right, last on the list for today is Legal and General, currently costing £2.79 a share. They've got a 16 billion plus market cap. They have a dividend yield of 6.44%, which is very good. They pay out their dividend twice a year, so biannually you'll receive payment. And again, if you've grown up in the UK, there's no doubt you've heard of Legal and General. They advertise well, and they provide many services and stuff like life cover, investments, retirement policies, insurance policies. They do so much stuff. But yeah, another strong company which should make the list of ones to do your due diligence on and look into further. Oh, and speaking of home insurance, that's just reminded me. If any of you are actually looking for a mortgage, or maybe it's your first, maybe it's your second, or any mortgage related services, then get in touch with the good people at More to Go. My girlfriend and I have both used them and they've seen us right. So yeah, definitely check out More to Go. Right, that's it for this one. You've made it to the end of this video. Thank you very much for watching start to finish. You know, gratitude is always the only attitude. New video coming soon. Actually got a special one coming up. I'm hoping it's the one after this one. If not, then I'll keep you informed anyway. But yeah, just like to say thanks again for your time. And if you can, please like the video, much appreciated. I need some help with this YouTube algorithm. And also subscribe if you haven't already and hit that notification bell. It will tell you when I upload a new video. And yeah, share this video with your friends who got like-minded interests. But yeah, until the next one, take care of yourself, people. Adios.